Okay, this video is going to be about how to trade the V-shape in the New York session. Okay, let's get right to the charts. And here we have 2 weeks, only 2 weeks, that can change your life. It can recover losses or it could really level up your trading. In just 2 weeks, we have seen the market structure that we want to see to trade the best V-shaped scenarios within the New York session. And the reason is because you want the market to be in a bullish trend. Okay? So the V-shape, you trade it in bullish trends, and the most powerful V-shape you'll see during bullish trends is New York's manipulation during its AM session. Mostly. It's not always the case. It won't always work 100% of the times. But when the market shows bullish structure and previous sessions are holding this structure, the probabilities are in your favor. Okay? So that being said, looking at these 2 weeks, I have to pull the chart a little bit here so that you could see Monday of this week and Monday into this week, and it was until Tuesday. So almost 3 weeks the market was bullish. 2 weeks and a day and a half. Friday is missing in this day because it was a holiday, so it was closed, the market. But we were coming from a correction, from a consolidated week that had a correction and began a next wave of bullish impulse. This, by the way, is a 15-minute time frame. Now, I show you this, it's because it's very important, again, that the market is showing this behavior. So, having a correction taking place and the market bouncing and starting to break to the upside, you can put in play the V-shape. So, I'm going to start zooming in from this Monday that the week finished the consolidation and the correction. So, the market basically manipulates all of this consolidation with this Sunday into Tuesday drop that actually took place almost until Wednesday, all of Wednesday, but it was basically Wednesday midnight New York that the market then started going up and distributed all the way up for 2 weeks and a half, almost 2 weeks and a half. So this that structure or that behavior of consolidation, manipulation, distribution is how the market moves as a whole in general. You will always have corrections or a consolidation, a manipulation, which is the correction itself actually. So I'll start over. It's a consolidation, correction or manipulation, and rebound or distribution. Okay, and I'll make a drawing for you if you need a bit more visuals. You have the market going up, it makes a pause, it consolidates, it manipulates, and then it distributes that manipulation. And so you have this structure that it's basically these little three squares that you might have seen them around the internet, but that's basically it. You want to see this behavior in a bullish market. Okay, and essentially the V shape is catching either the bottom of a correction and or as the market is going up, you're catching each higher low. Okay, so you're focusing on getting those little dips, and you want to buy and hold, and you can hold up into the recent high or a higher high, and you're going to basically look to the left to see what previous highs the market is targeting, and if it's new highs, you just want to trail your trade if you're holding. If you're not holding, you know basically based on this structure when you can get out, when you can go back in, and so on. So let's zoom in on this particular day, which was Monday during New York session. So remember, we're coming from this correction that's taking place from Thursday, and the market by Monday morning during New York, the market has a strong sell-off, and right at their PM session, starting 1 p.m., as you can see with this candle, 130 bullish candle, the market bounced right here. This is the 15-minute time frame. I won't go into the 1 minute or 5 minute to analyze this. I just want to show you how New York marked the bottom and it bounced, and Sydney and Tokyo respected that and didn't actually want to come lower. So that is starting to tell you also that Sydney and Asia are buying as well. That's a lot. That's valuable information. Okay. Next day you have London consolidate, New York manipulate, and Asia start distributing. Now the reason why New York wasn't last to buy here is because they already were last to buy here. They already got the best price possible. So now you have both New York and Asia making a pullback to this area that it broke. But most importantly, I want you to look at these lows over here where New York manipulated this Asia low. Okay, so this Asia low right here, which I'm going to mark in another color so they can better see it. Check this out. If I extend that to my right, look how the market respects perfectly that low. And that is not a coincidence. That is algorithmic. So that's why essentially Asia fails to continue breaking lower to take this low out. Okay, so having this information now and knowing that Asia bounced so strongly to the upside and it broke New York's high right here, this is already the beginning of a new impulse wave to the upside, because that's how the trend has been coming from. Okay, so this is your first breakout, important breakout, which happened on Wednesday. So Tuesday morning for Tuesday night into Wednesday morning. This is focused on New York. So based on this behavior of Asia and London, look at the time that New York opens and look what it does into its opening. It respects market structure. It respects this previous resistance and it uses the 50% of its range to bounce. I can measure the wick to the wick and notice my rectangles have already a middle line drawn in as default, but I'm going to make it more evident by doing that. So look where the candles respect is the 50%. You see that? And even if I mark the bodies only, it will still respect the 50%. Okay, that being said, what happens for New York, you want to see this V shape occur between 9:30 and 10:30 in the morning. Okay, and before I show that specific example, the V shape is a pullback that will bounce in an algorithmic level and or that will take liquidity from a previous low, right? An important low, okay? And as you know, the structure of the V has a 1, 2, 3, 4, 5 push, 5 pushes basically, and you want to see this happen. You want to see a first drop below a previous low or some area, push 2, you have 3 below 1, 4 above 2, and 5 respect 2 to 3. I know this is not new to many of you, but if it is, you have to engrave this in your mind and draw it somewhere. Keep it close to you. This is what you want to look for. Okay, and in this particular example, it did not happen at between 9:30 and 10, but it did start happening around here in the PM session, which is also a potential time frame it could occur. Okay, this particular day there was FOMC news, so the market manipulated and liquidated into this imbalance right here, this empty space between these candles, respected that area and bounced back. Okay, if we look in the 5-minute and 1-minute time frame, this will have a V-shaped structure. We will go to it in a second, but I want you to see the time frames and the time windows. I mean, look at here, 9:45, 10. The session opens. It looks for liquidity or to make respect a bullish structure. 9:45 to 10. So between 9:30 and 10, you have that opportunity. The next day for New York session, the market reaches a weekly high and it consolidates because it's Friday. Okay, what do we have? A slight correction, a bit of a longer consolidation, but over here we see yet another V shape. Look at the time, 9:45, 10. Okay, there's the V shape. This is the 15-minute, but even in the 1-minute and 5-minute, this over here is going to be a V shape. I'll show it to you, but this is the drop to pull and then close back above. These are the lows that the market is taking right here, and look how they respect in that future. Okay, and in lower time frames, the low that's getting manipulated is this wick right here, this wick of the 8:15 in the morning. It gets manipulated, trades back above. All these lows get respected here eventually as well. Okay, this is another session by New York. Look at the time, 9, 9:15, 9:30, 10 in the morning. Yet another attempt by 11:45, but this AM session holds. Okay, and we have that explosive continuation. Look at the time, 9:15, 9:30, 9:45, 11 in the morning, continuation. This is where it reached a maximum, and in this particular week, and the market then corrected. It didn't go all the way back down, but look at the time, 9:45, it opens, 10:30, 10:45 again. Okay, so these sessions could have changed and will in the future change everything, because this repeats. When the market enters a bullish trend, it doesn't have to be for a month. It could just be a single week. In 1 week, you can catch a Monday low of the week, a Tuesday pullback, a Wednesday pullback, potentially a Thursday pullback, and don't trade on Friday. Or depending on how each day develops, if it's not Monday low, if it goes Monday bearish, Tuesday bounces, you take that entry, Tuesday the pullback, Thursday the higher low into Friday, and you get out on Friday, you stop trading on Friday, right? Because you don't know if Friday is going to reverse or consolidate. Next week, you can play it based on the current week that you did. Okay. Now I'm going to go into the 5-minute, because some of those higher lows you could see in the 5-minute time frames. Okay, so we have to go back in time and show you that week in particular, which I believe was over here. Okay, yes. All right, so we were coming from this correction. Let's look at the 5-minute time frame, if we can see one of the structures that I'm talking about. This is one right here, 1, 2, 3, okay, below 1. Yes, 1, 2, 1, 2, 3 below 1, 4 is all this, like 4 above this 2, 5 wanting to respect the range between 2 and 3. We have a manipulation and the range respects 2 and 3. It holds right here. And if you see, this is another V shape, taking these lows out and respecting in the future. You see that? So this is, however you do it, it respects, it will hold. Okay, once you get the V, it holds. Okay, so this was one in the 5 minute, how you could see in the 5 minute. This is the second attempt to manipulate, and this is where it starts breaking higher. Okay, let's look at the 5 minute over here. It doesn't seem too clear, but it's this push down and up. So this push down, up, right? This candle is 1, 2, 3 below 1, bouncing at the 50%. 4 is, as soon as this candle closes above the bodies of this one, all that area is 5. Okay, this was a very strong displacement. Maybe in the 1 minute this will seem a little different, but still, this is where the structure is. Here's another one. So the bodies tell the story. I forgot to say that, but it's important that you look at the bodies as well. Mostly more than the wicks. If you don't look at the wicks, you'll see how the bodies are holding that structure, okay? So right over here, we see 1, okay, all this 1, 2, 3 below 1, and even the wick comes below this wick, right? But the bodies are closing below these bodies, and look at these bodies equal lows. These equal lows, the market is taking those out, but it closes back above them, and the bodies here are closing just above these. So that's why this ends up holding. The market is already flipped to the upside, breaking these highs. So it's breaking structure. It is shifting market structure. Okay, now price is not delivering to the downside. It's flipped and it's coming to the upside. Okay, and so that is where you see these bodies holding. Okay, again, it's not such a pretty example. You will definitely see prettier ones, or ones that are a bit more perfect. This one is very strong to the upside, so there wasn't a clear 1, 2, 3, 4, 5. Let's see another session maybe. Okay, this was that Friday, so not much here. This was sort of, but you see it's like maybe like a W, and there's not the V shape in my opinion. This session was also strange, consolidating. Here is a better structure. This one has a prettier structure, which is 1, 2. So this drop is 1, this push up is 2, and the reason is this push 1 comes below these lows, and even this one, and then 2 trades into those lows again, trades back above them. So that's 1, 2, 3 below 1, 4 closes above these, which is 2, and look how market comes and taps that area of 2, between 2 and 3, respecting not just number 2, but respecting all these lows that the market took out over here. And even here in the future, they also hold. So this is a beautiful V shape. This is 100% the V shape, because look how it offered that strong continuation. So this was the higher low of that particular day into that next session. Explosive breakout to continue the trend. Okay, that is one of the best V shapes I've seen in months. Okay, then we have again over here, look at this, 1, 2, 3, 4, and look how 5 respects the range of 2 and 3. This is really amazing. I love this. Look at the time, 9:30, 9:35, 9:40, 9:45. That is also a V. And what is that? That's a higher low. Check it out. Higher low, higher low, higher low, higher low. Boom. Continuation. Those are 2 days in a row in which the V shape holds, the time window, the market structure, and it gives you that explosive bullish continuation. Okay, in the 1 minute, you will see basically the same criteria. Let's see if we can find it, if this allows us to go all the way back in time. I think it might not, but let's try it. Let's see. Nope, I can't see more candles. I have to have more history. But let's see this particular example in the 1 minute. Maybe one of these sessions has One of these New York sessions has a V shape. No, and also the time. Well, this is 10:45. No, I don't like this. And this was a correction, so not really clear. This was consolidation, correction, A shape. So this is nothing to do with the V. This wasn't in the time. Well, sort of. This was 10 into 10, 12, 10, 15. 1, 2, 3, 4. So you see. Okay, well, that was the 5 minute, which again, as you saw, is pretty also. You can see it. Let's see. Let's try looking one more time. Okay, this is not bad right here. You can see it also. 1, 2, 1, 2, 3, 4, 5. Okay, with these candles. So here I'll show you. This is remember that candles. This is the 1 minute, but also there's 30-second candles. So as each of these candles, you can divide those in two, but I'm not going to confuse you with that. Just keep in mind you have one. So these are the lows right here. So the body of these, this wick and this wick. So this is the range that the market is taking out here, and this candle comes back into that. You see that? Then having that as 1, 2. So this is 1. This is 2. Here comes 3, manipulating all this area, and even these are these lows that the market is taking out. So as this candle in the 1 minute is coming down and back up and then back down, that's 1, 2, right? You have 3 and 4 closing up here. Okay, so this is 4. And as this candle comes into this and bounces, that's 5. You could also say, look at it that way. And or the next candle right there, 5 holding 2 and 3. Okay, because you can look at this in the seconds time frame, you would see basically a few candles do this. Okay, so 1, 2, 3, 4, 5, and then the market flips and it goes up and it offers you that entry. You see that into the next session, and then the market corrects. Okay, so that's about it. Under 25 minutes. I was expecting to take about 30 minutes, so we did it just under time. The V shape for the New York session. I recommend you make sure that the trend is bullish and that the previous sessions are buying. Both London, Sydney, Asia, possibly even yesterday's or the previous day's New York session. Okay, because you're gonna catch a pullback of the trend to get in a higher low. Okay, so that's about it, guys. The V shape for New York session. I hope this video helped you. I hope you liked it, and good luck in your trading.